Okay, if you can hear my voice, this is an application that I have spent years building and tinkering with. I'm not an Excel programmer by education, but I've learned over the years on how to do this, all for trading. So this is it's called the New Equity Curve. You can see that right where my mouse is, the NEC New Equity Curve. And this is for traders, especially traders who are trading contracts through prop firms. So you can begin by clicking here and selecting what prop firm you're with. I always use Take Profit Trader, but I have also Apex and My Funded Futures, Tick Tick Trader, and Top Step. There's a ton that I can add to this, but there's not really any benefit because regardless of which prop firm you go with, they all have your standard 25, 50K, 75K, 100, 150, and I believe Apex goes right up to 250, even 300. But it doesn't matter which prop firm you're with. The bottom line is this is about a trader understanding his risk-reward profile and how long it's going to take that trader to pass the evaluation or fail based on their position sizing. So my motto kind of with this application is risk management, position sizing, and probability. Those three factors are the big determinants as to whether you pass. And it's not just about passing an evaluation. We're in this not just to pass, we're in this to profit and make money and hopefully become one of the very select few who can make a living at trading. So real quick, if you see this application, anything in dark blue, any field or cell that is in dark blue, like here, here, all of these, here, 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 and then of course these cells, even your dollar goal, of course, and then your consecutive losses. Those are all user defined. You can change them. The trader can change those variables based on his or her trading performance. So that's a great segue into, in the journey of becoming a hopefully successful trader, we're all at different stages. There are some traders who have been at this for a number of years and are fantastic. They have a phenomenal win-loss rate. But there are also traders who are just getting into the game. With the explosion in popularity of prop firms, there's a lot of people who are being drawn to the potential of what this industry and this space could offer in terms of income and as a career. So you may be new and your numbers are going to be probably not very good from the jump. That's just the reality of trading. I have seen video after video, book after book, social media post after social media post that say you're going to have to go through 2 to 3 years of probably hell learning the game. It's difficult and it has a very, very low passing rate. So with all that said, that was some housekeeping. I just want to show you the power of this application, and it runs on a Monte Carlo simulator. There's a couple of functions built into Excel. One is called RAND and the other is called RAND between, and that is kind of the engine that drives this entire application. So I'm a trader, and let's say, for example, right up here, once again, dark blue, this represents your absolute losses. So out of 100 trades, how many were absolute losses, meaning you got stopped out? You put the trade on, whether it's long or short, makes no difference. But the reality is you got stopped out of the trade. That's fine. That's good discipline that you actually had a stop loss in place. So in this example, we have a trader who is right. Well, let me rephrase that. We have a trader who is wrong on 40 out of 100 trades. So by default, that means the trader is correct on 60. So he's a 60% winner, 40% loser as far as getting stopped out. Here we have, this is just going to be a brief overview of what this application can do. We could get into the weeds on this, but that's not the intent of this short introductory video tutorial. This is what I call no man's land. It's in gray, and what that means is you could put a trade on. We've all done this as traders. You put a trade on and it starts to move in your favor. So let's just say we bought something and we went long, which means we want the market to go up, and it initially moves in your favor, but it doesn't hit your profit target. We all have profit objectives or profit targets. It doesn't quite reach it. So it's a winning trade for I don't know how long, but then it turns and goes back down. What I advocate and most traders, this is not unique. This is in fact almost standard practice, is that when a trade moves X number of dollars or X number of points in your favor, so it's a winning trade, a lot of traders will take their initial stop loss and move it to a break even. So in the event of what I just described, which is the market moves in your favor, you're up, I don't know, $100, $200, $1,000, whatever position size you have, whatever instrument you're trading, it moves in your favor and then reverses and comes back down and you get stopped out. And that kind of, quite frankly, sucks, but that is the nature of trading. And if you are a proactive trader, you have taken your initial stop loss, moved it to your entry price. So now if in fact that event does happen where the market turns and comes back down, yes, you get stopped out. Yes, you left profit on the table, but you did not risk anything, or you have removed the risk by adjusting that initial stop loss. That's what this is. And then of course we have our, let me just move my mouse here. We have profit target 1, profit target 2, and profit target 3. That's how I like to trade. So if I'm in a winning trade, I will take some of my contracts, I'm talking futures contracts, I will take some of the contracts off and book the profit and then adjust my stop loss, and let's see how far this can ride. So in this example here, we've got a trader who's trading a total of 6 contracts. The trader can select how many contracts he or she wishes to trade. So I have, in this example here, I have a trader who's basically an all-in or all-out trader. What that means is if it hits his profit target, which is 2.98, so now I'm going to kind of backtrack or digress for a moment. What is 2.98? Let's just round that up, by the way. We're going to click on the user-defined spinner button, and now we've changed it to 3, okay? What does 3 mean? Well, 3 is your, I call it an LCD, which is lowest common denominator. Most people refer to it as an R multiple, okay? And what is an R multiple? 3 times what you're willing to risk. So here is your stop loss in points. So I've got it at 14.25. Let's go ahead and change that. Let's put it at, just to keep the math nice and simple, let's change that down to 10 points. And as you can see, this application is changing as I'm manipulating the variables here. Okay, so there we go. We have 10-point stop loss. We're trading the micro NASDAQ right here. And again, that's a user-defined field. These are the different these are the different instruments that you can trade: the mini NASDAQ, micro NASDAQ, mini S&P, micro, and so on and so forth. Right now, I've got it populated with, without question, the most popular futures contract to trade, which is the NASDAQ, and in particular, the micro NASDAQ. So it's $2 a point. So if we're trading 6 contracts at $2 a point, and we have a 10-point stop loss, if we put the trade on, and we said, let's buy it, I get a signal to go long. We buy the contracts, 6 of them at once. It's $12 per point in either way. Remember, it's $2 per point. Times 6 contracts, that's $12 a point. Well, if we have a 10-point stop loss, we just risked $120, or would get stopped out with a $120 loss. And our profit is a function of our stop loss. 3 times 120 is right there, $360. So it's an R multiple, 3 times, and people will say 3 times what? Well, 3 times your stop loss. Okay, so everything is user defined. You define the stop loss, you define your R multiple. Okay, like maybe somebody's like, I'm happy with a 2-to-1 ratio, so then your profit would be $240. So that's how the application works. And again, some traders may say, I still want to trade 6 contracts, but you know what? I want to reduce this and say 2 contracts here, and I will sell those for a profit of 120, and then I'll trade 2 contracts at profit target 2. Let me just bring that back down to 2. And I want to trade 2 contracts in profit target 3. And of course, we have what's called, I'm not going to get into this right now, but we have what's called a win weighting. So assuming this is a winning outcome, meaning we did not get stopped out, we did not make money yet. There's no guarantee that we made money, because remember, we could still break even, but we did not get stopped out of the trade. Okay, so if it goes in our favor, we could take 2 contracts off here. We could take 2 contracts off at PT2, which is profit target 2, and we could take 2 contracts off at profit target 3. We're still trading the same 6 contracts, but what we're doing is, this is called a scale with break even. And you can see that right where my mouse is. That's a single exit where a trader just gets in, and if he's wrong, he loses $120 right there. If he's right, he's going to make $360. Whereas here, side-by-side comparison, this is a trader who decides to say, I'm going to take 2 contracts off here, 2 contracts off at a higher profit target, and maybe it's a massive move, and we've had a few of those recently in the last few weeks, and I'll take 2 contracts off at my most aggressive profit target 3. Once again, the profit targets are yours to define, okay? And most importantly, right here under win weighting, we can put in the probability of reaching these higher profit targets. So like in football, I use this as a metaphor. My favorite running back in the NFL was Barry Sanders. He was the best. And if you handed him the ball, on average, he'd probably carry, I don't know, 4.5 to 5 yards per carry. But every once in a while, he will get a 30 to 40 yard run. And every once in a while, he'll get a 60, 70, 80, massive run for a touchdown. It's the same principle. They don't happen often. Okay, they don't happen often, and this is where you put in the probability of getting to this higher R multiple of 6.54. It's just a random number I have there. Once again, the user can populate whatever value they want here. And if that happens, you get paid $262. And then, once again, that Barry Sanders football metaphor, let's say it's a huge run from the scrimmage line, and he runs a, 85, 90-yard run for a touchdown. Doesn't happen often. You put that in there. You put in and say, hey, that happens maybe 5% of every trade I take. You'll get a massive, big move. And again, but when you do, look at the payoff. It's $568. So that's the different approach to getting out of the trade. But for now, I just want to return. I'm going to put these back to 0. And we're just going to have a trader go with 6 contracts. That should be 6 right there. No, 1 more. 6 contracts with a 3-to-1 R risk to reward. Okay, so the payoff would be $360. And as you can see, if you're right on 60% of your trades by default, or other way around, if you're wrong on 40% of your trades, then by default you're correct on 60%. And all you're trying to do is get 3 times your loss. Well, take a look at what happens over a series of trades, and this is where I'm going to hit F9. If you hit F9 within this application, it shuffles your order of wins and losses. It does not change your performance. If you are a 60-40 trader, if your profit target is 3R and you're doing 6 contracts, or 4 or 2, in this case it's 6 contracts with a 3R multiple, and your stop loss is 120, we don't change, or this application does not change any of those metrics. What it is doing is it's stress testing the order of when the wins and when the losses occur with a 60-40 win-loss ratio. And we're going to focus on this one here, scaling with break-even. Because if you notice here, we've got 2 wins in a row, and then we've got a break-even trade. More wins in a row, a break-even, and then we go to a win, and then we have a loss, and a couple wins, and then 2 consecutive losses. So this will change based on, if you're not as good a trader here, if you were to say, hey, I'm new to trading, I'm only right on, 40% of my trades, we would reverse these numbers. So you're wrong on 60%, you're right on 40. This will change drastically. This is reflective of the settings that you have given the application. But what I'm going to do right now is hit F9, and we're going to shuffle your performance metrics. Not the performance metrics themselves, just the order of the wins and losses. So let's go ahead. And there you can see the randomization. So I want to draw your attention to something that I created. It's a proprietary indicator called the Trader Stability Index right here, the TSI. And this basically will tell you how successful you're going to be, not only at passing the evaluation, but on going on and covering the buffer zone right here, buffer, and then hitting your own user-defined goal. So in the world of prop trading, you have to pass the evaluation. And some people will say, well, what's the evaluation amount? That depends on the prop firm, and that depends on the size of the account. If you remember back here, I'm looking at the Take Profit Trader. There are different account sizes that you can purchase an evaluation on. 25K, 50, 75, 100, 150. The bigger the account, the more money it's going to cost you on the evaluation, but they give you more contracts to trade. So for example, right now, to pass the 50K Take Profit Trader, let's just put that in, you need to make $3,000. Okay? On the 50K Take Profit Trader, you need to make $3,000 without losing $2,000. EOD stands for end of day drawdown. if you purchased the 50K Take Profit Trader account today, you have 30-day window, 1 month, to make $3,000 in profit and not lose $2,000 in the process. Okay, so that's just to pass the evaluation. Let's say you do that. In the first couple of weeks, you had some really, really good trades and you passed the evaluation. Now they'll put you into a sim account, okay, sim/live account, and they say, now you're trading money. By the way, you make no money in the evaluation. You have to prove to the prop firms you know what you're doing. Then they put you into a sim live account. And from there, they say now the first $2,000, which is right there called the buffer zone, that first $2,000 that you make, you will not get paid on. It's your money. As a trader, you earned it. It's your money. But the prop firm will hold that as a security blanket. It's their buffer. That's why it's called the buffer zone. So if you have some losses, the losses are your first $2,000 of earnings. Anything above and beyond that $2,000 of profit is when you start to get paid. And it's an 80-20 split with Take Profit Trader, meaning so if I made $1,000 above the buffer zone, okay, so I made $3,000. The first $2,000 they hold, and I made an additional $1,000. You would be able to put in a request, a payout request for $800 because Take Profit Trader would take 20% of the $1,000 profit. Okay, so a user may say, well, I want to make X number of dollars. So you click on here on the dollar goal and say, all right, I want to make 5,000. Great, let's put it in. This application delivers the reality of how long it's going to take you to pass the prop firm, to pass the buffer, and to hit your user-defined goal. Okay, once again, I put in 5. Let's change it to 4,000. Let's just, I don't know why I just picked that. Let's just pick 4,000. And if you look down here, it tells us how long it will take you based on trading 6 contracts, based on a 10-point stop loss, based on trading the micro NASDAQ, and a trader being a 40% loser. I don't like to use that language, but 40% of his losses or her losses are 40% of his or her trades result in a stop out loss, but 60% go on to become profitable. And when they are profitable, this particular trader has decided to go for a 3R multiple, 3 times what he or she is willing to risk. If you're willing to risk 120 and you want a 3R multiple, then you're looking to make $360. So with all of those metrics plugged in, how long will this take me to pass? And how long will it take me to get through the buffer zone? And ultimately, how many trades am I going to have to take to hit my $4,000 goal? Well, now watch closely. When I hit F9, it's going to randomize those numbers, but you're going to get a feel, a sense of what lies ahead for you based on all those user-defined metrics that you put in. So go ahead and let's watch this. Okay, so I'm going to focus on passing the evaluation. It's going to take you anywhere. There's 29, 23, 18, 25, 34, 29, 25, 29. So I would say comfortably 32, 33, maybe let's say 35 trades roughly. It's going to take you to pass the evaluation based on all these metrics that we populated. Well, how about the buffer zone? We got to get through the buffer zone. We still haven't gotten paid yet. Well, the buffer zone right now is sitting at 60, but let's go ahead and hit F9. We're going to randomize your wins, losses, and break-evens. So let's go. 41, 35, 45, 39, and so forth. You can see. So it's going to take you a little bit longer to get through the buffer zone. Let's average it and say 50. So about 30 to pass. Another 20 additional trades to get through the buffer zone. But here's the real payoff. How long is it going to take us to get to our $4,000 payout? That's what we're after, is that $4,000 target. Again, once again, Take Profit Trader will take 20% of that. But your goal is to make $4,000 above the buffer zone. So let's go ahead, hit F9. And you can see 70, 80, 90. So it's going to take you some trades to hit that $4,000 target. Okay, and this is just trading one single account. Okay, we're not going to get involved in copy trading. So that is an option, by the way, right here. Let me just change this to 1. Whoops. We're just trading one account. There we go. It still doesn't change the metrics here of how many trades it's going to take you to pass. Okay, 75, 80, 50, 77. So it's varying between as quickly as 50 trades, which would be, that means you had a lot of wins consecutively, right up to 86 or 90. So let's just do a few more. There's a 90. there's a 90. It looks like, I would say comfortably 65 to 70 trades in order for you to hit your profit target of $4,000. So once again, this is a powerful application. I just scratched the surface of what it can do. The most important one is right here, the Trader Stability Index. The higher, the better. Anything above 45 or 50 is acceptable, meaning you're not taking too much risk, you're not trading too many contracts, your stop loss is not too high, your win-loss ratio is, as far as absolute wins and losses, is favorable. And look at that, we have a Trader Stability Index of 70. And what we don't ever want to do is lose $2,000 or more, because that means we blew the account. So once again, I'm going to hit a whole bunch of F9s real quick to wrap this up, to show you that at no point did this light up. There. Now it lit up here under daily drawdown. You'll see it turn red there. There was one instance that happened. And what the daily drawdown was, first and foremost, it's been removed from Take Profit Trader. Take Profit Trader used to say, in a given day on the 50K account, maybe you're taking a whole bunch of trades and you're down $1,100. That's it. You haven't blown the account. You have not blown the account. But for the day, that's it. You cannot trade anymore for the day. They're basically stopping yourself from blowing up the account. So if you hit a loss of $1,100 or more, they would have stopped you. Now this has been removed. This feature by Take Profit Trader was removed at the request of many traders. They didn't like the daily drawdown limit, so it's been removed. So if you want to blow up your account in a single day, go for it. This is the hard line, the end of day drawdown, EODDD, meaning in that 30-day window, you cannot lose $2,000 or more. If you do, you've blown the account. So let's focus here. We're going to shuffle. And if a number populates in here, that means you actually blew the account. So let's go ahead and hit F9 and shuffle. So you can see so far I've just hit it about 20 times, 30 times. Under no circumstances here are you going to blow this account. So that wraps it up. I'm just scratching the surface of what's capable within this application. There's a ton of metrics in here, but that goes beyond the scope of this particular introductory tutorial. This is 22 minutes long as it is, so I hope you enjoyed this, and thanks for watching.